All right, good morning, Trade Pros. Welcome to our morning market update for March 9th. This is George Papsov of Trade Pro Academy. We're back today after having a little bit of technical difficulties yesterday, so we did not do a morning market update. But today we're going to do one that's twice as good to make up for the fact there wasn't one yesterday. That's simple math, right? In today's morning market update, we talk about the jobs report. So we had the non-farm payrolls come out for the month of February. We're going to break those down and why the market is taking a bullish note and what you could expect from today's session. All right, we're also going to talk about Donald Trump and North Korea relations. And then we're going to just take a brief overview of the markets and slide into the trading room and do what we usually do and make some money. All right, simple as that. So let me just do one thing before we get started, because the team here is in outraged trading room because I'm not sharing the screen, so I'll share it for them so they could see a stagnant screen while I talk. All right, so this morning, first and foremost, let's take a quick tour of the markets around the world to see how we did overnight. All right, so my notes are on my other screen down here, so I got to look down. In Asia, Japan's up 0.47%, Hong Kong's up 1.11%, China's up 0.57, and India is down 0.15. So we're getting a little bit of strength across equities here in the Asian session to start the Friday, or to start really end the Thursday night in Eastern time zone. In Europe at midday, London's down 0.1, Frankfurt's down 0.8, and Paris is down 0.08%. So we're seeing weakness in the European equities after some strength in the Asian markets. And then, as we all know, the markets were all waiting for the number this Friday morning. That was a big release. It's a monthly number, the jobs number, the payroll number. It's what the Federal Reserve looks at for unemployment. Jay Powell at the last meeting said that, employment numbers haven't been as good as the picture's been painted. And Janet Yellen just finished her term saying how great employment's been. So some confusion out of the Fed. I think the Fed's looking for some room, some wiggle room on these interest rates, um, to to not be as bullish as they expected or hawkish, which means continue to raise interest rates. They want an option to not raise if they can get one. And what do they need? They need something to justify it, either lower inflation or lower job numbers. So this is why it was front and center this morning, these job numbers. At 8:30 in the morning, they came out, and I'll tell you how they came out. They came out as follows. We had a 303,000 increase of jobs in the month of February. That smashes the expectation of 205. All right, almost 50% higher. So very bullish, strong number on the economy. And more than that, it's above the 209 and 239,000 that was revised higher from 200,000. All right, so expectations were at 205. Last month was at 239,000, and it was revised higher from 200,000. And you get 313, not 303, 313, 313,000 jobs added. Very bullish number dropping in here in the morning. And before this number, we were having a fight on the bearish side. We were pushing markets lower, trying to see if we could crack some support levels, and we could not. So what you're seeing now is the beginning of a potential short squeeze to come in the markets throughout all of Friday. Let me tell you something. Next Friday's options expiry. There's a phenomenon called the Thursday Friday low. So yesterday and today's session marked the lows of the market going into options expiry, which means we could stay bullish up until options expiry of next Friday. So this could have been the low, and the upside may just be the right side. There's an inclination for some bullishness 1 week before options expiry. I won't get too much into that, but just know that pattern because it's very helpful. Super important to know that. Now, it wasn't all just roses and good things. Bad analogy. We saw a drop. So here's the thing: we expected to see a drop in unemployment rate and did not. All right, so it remained unchanged at 4.1%. Economists were forecasting for 4% in unemployment, but in fact it stayed at 4.1. So that wasn't good. In addition to that number, because remember the jobs report is threefold. I can't tell you how many traders don't know this. It's not just about the number of jobs. Yes, that's one, but there's two other things that arguably could be made more important, especially in the eyes of the Federal Reserve. All right, so while the actual job number went up, average hourly earnings went down. All right, so the amount of money that people are making on average on an hourly basis decreased by 0.1%, which if you analyze that 1 to 0.2%, because 12 months, if that pace continued, that's not good at all. It's not good to have more jobs. Why? Because it looked like they're paying less. All right. And the market missed that part. It didn't really care about that part. The market this morning needed a reason to rally. It's rallying twofold. Number one, it's rallying because of the headline number of the actual non-farm payroll jobs. And number two, it's rallying because the actual overall view of labor is not that great, which means the Federal Reserve may not raise rates as much, which is also bullish. So that's why the market's taken a reactionary approach of going higher. Since the close of 39 quarter in yesterday's U.S. session, we're up about 20 handles on the S&P 500. So keep that in mind. Today, look for some weakness early on at the open and trade the long side. And if you're wrong, if you take a long trade and it breaks support and this thing just keeps getting hammered, stop buying it and start shorting it. So have an idea, but don't let the idea be the death of you. Have the ability to also switch over to the other side, because that's how you really make money trading. It's not executing until you prove yourself right. It's executing what you see until you put some money in your pocket and then leave for the day. It is Friday today as well. I want to mention this. We look like there's a little bit more risk and appetite for risk coming into the marketplace. First of all, on this potential expectation for less interest rate hikes from the Fed, but more importantly, North Korea and the United States have had a lot of tension recently. There is now a formal agreement between Kim Jong-un of North Korea and Donald Trump to meet in person and discuss the denuclearization of North Korea. All right, this is big news. Remember, there was almost a nuclear war. They were pushing each other to the brink. They were playing a dangerous game, and now they're agreeing to sit down and actually have a discussion. Rumors are that during the Olympics, North and South Korea saw some gravitational force to work together, and South Korea is an ally to the United States. So it seems like South Korea aided in the setting up of this meeting, but North Korea's Kim Jong-un and United States President Donald Trump will actually meet and have a meeting. That's never happened. No United States leader has ever met with Kim Jong-un. All right, so I think here's the thing too, for Kim Jong-un, I think that's a win. I think he was able to capture the attention of the United States. He was able to sit at the table with them, and he got a seat at that table. And I think that's pretty much the whole intentions. I think that's a win for him. So that's driving some of the positive sentiment. Look for the upside. Expect to stay bullish. Today, I'll give you some of the news numbers that you should be watching out for. 10 a.m., we have wholesale trade, not a market mover, but if it deviates significantly, it can be slightly. I mean, I wouldn't say the whole day will turn because of wholesale trade, but it's an interesting number to keep an eye out on. Here's something that can be very interesting. At 10:45, Fed's Evans is in a live interview with Kathleen Hayes during a Bloomberg Market segment. So if you want to watch it for free, you can just get Bloomberg TV for free. He's talking on U.S. economy and monetary policy. Live interviews are really neat because there's an opportunity for it to deviate from the script, and he might say something that wasn't expected. And then at 12:45, Fed's Evans is at the Shadow Open Market Committee talking on U.S. economy and monetary policy. So he's got two speaking engagements today at 10:45 and 12:45. So keep an eye out on the markets. If you're an oil trader, 1 p.m. is your Baker Hughes rig count, and that's an indication of production out of the United States for oil. Super important number. I don't plan to be here. I'm making my money. I'm getting the heck out of here by 11 a.m. Eastern time. All right. 8 a.m. Pacific. It's actually kind of cool to trade out of California. I'm in California at the moment in an Airbnb. You can see the kitchen in the back because it's the only comfortable way to set this whole setup. But it's kind of cool to wake up at 5:30 in the morning and be done at 8. Be done and have your whole day to do whatever the heck you want. Man, is that a good feeling? I mean, I'm choosing to do studying and self-development with that time. So I'm still crunched for time, but it's my choice. He could have chose to do anything else. You guys have a great day. I'll see you tomorrow morning. No, I won't see you tomorrow morning. Happy Friday. Have yourselves an awesome weekend. I'll have 2 videos for this weekend, one on Saturday, one on Sunday. I'll see you guys back here Monday at 9 a.m. Trade careful. Trade like a pro. Manage your risk. I see you guys next week. All the best. Feel free to comment, like, share, subscribe. I encourage you to provide us some feedback, your comments, and punch that little like button. It really helps us make these webinars great, get content out there to you, and open up our content to new viewers. It helps us grow the family that you're part of. Take care, guys. Have a great weekend. See you on Monday. I got to open up the trading room a little verbose today, which is good, I guess. You guys can get info out of me. Feel free to ask questions today. I may over-explain them. See you later. Have a great day. Enjoy your mornings, afternoons, wherever the heck you might be out there in the world. I appreciate you guys. Thanks for tuning in. See you on Monday. Bye.